19 of 19 series are aligned with STAGFLATION mild this morning. That is full systematic agreement across the 19 series the engine tracks. The current macro regime is STAGFLATION mild, with a confirmation score of 19 out of 19. The engine is observing a STAGFLATION mild macro regime, an environment where growth momentum is decelerating at -0.5879, while inflation momentum is gently accelerating at +0.0081. The coherence score is consistent with a tightly clustered configuration, and the confirmation score at 19 out of 19 marks the strongest possible regime agreement in this framework. Historically, regimes with a confirmation score in this range have persisted in 52% of comparable cases over 3-month windows, with the most common transition being into an acceleration regime rather than a disinflationary environment. Compared to recent weeks, regime alignment has strengthened into full confirmation, and inflation momentum has nudged higher, while growth momentum has remained in a decelerating band. In past data, environments like this have coincided with choppier equity behavior, firmer inflation-sensitive assets, and a tug-of-war in rate markets, purely as an observation of price behavior rather than any instruction. On the yield side, the 10-year Treasury sits below the 4.45% trigger, and the internal regime engine currently classifies the inflation-linked term structure as green, defined here as an improving rate of change in break-evens and related series relative to the prior month. In 9 of 11 comparable periods, this coincided with further firming in the inflation composite within 3 months. That count is a historical frequency, not a forward statement. Labor conditions, as proxied through non-farm payrolls and claims composites, are red in the framework, meaning their smoothed rate of change is negative beyond the engine's mild threshold. PAYMs and ICSA are both flagged with unfavorable momentum. In 7 of 10 comparable periods when labor momentum was red during a stagflationary macro regime, this coincided with softer subsequent labor indicators within a 3 to 6 month window in the historical sample. The math is simply describing what has happened before under similar patterns. In credit, spreads in credit-sensitive series sit closer to a yellow band, where the rate of change is flat to modestly widening, but not at stress extremes. Yellow here denotes a neutral to slightly deteriorating configuration. In 6 of 12 comparable environments, where credit sat in this yellow zone alongside stagflation-type conditions, the data set recorded uneven but not disorderly spread behavior over the next quarter. That is a contextual base rate, not a characterization of current risk. Across equity sectors, the internal rotation view shows green momentum in areas like technology, materials, industrials, and gold-linked proxies, with red or softer readings in energy and real estate. Green in this context is defined mathematically as a positive, persistent rate of change across the engine's 4-layer sector template. In 8 of 15 historical periods when multiple cyclical or growth-oriented sectors were green during mild stagflation, this coincided with elevated cross-sector dispersion within 6 months in the sample. If the 10-year Treasury yield crosses 4.45% and holds that level for 5 consecutive sessions, similar configurations in 9 of 11 comparable instances coincided with an acceleration in the inflation composite over subsequent months. Within the engine, that type of move has historically shifted the mathematical base case toward an expansion to acceleration transition in the regime map. Again, as an observed pattern in the data, if the fear and greed index drops below 15 and holds there for 5 consecutive sessions, the confirmation structure has historically deteriorated in 7 of 9 comparable instances. That shift has often marked periods where the engine's confidence band around the macro regime narrowed, and regime watch flags appeared more frequently. The map is live. These conditions are being monitored daily across all 19 series. Atlas is the automated, rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates we just covered. Second, it runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 symbols every trading day. When all 4 layers agree on a symbol, Atlas records it as a potential long or potential short condition under the framework, time-stamped for members to study. The environment view and the condition log sit side by side inside Atlas. They are separate outputs. The regime does not pick the symbols. The 4 layers do. Atlas monitors 407 symbols independently of any macro regime label, and members study how those recorded conditions have behaved across prior environments as historical behavior, not as trade selection. Atlas runs the framework. Members study the outputs and environment. Any action, if taken, is their own, and the entire process is framed as potential, and educational. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.